Every week, Iggy Damiani from Global Capital comes on the show and gives us the inside scoop on commercial and development finance. Hey Iggy, welcome to the show.
Thanks, mate.
I suppose mortgage investment schemes are not a good place to have your money at the moment?
Well, it's basically just a mortgage trust where individual investors put money into the mortgage trust for a return. At the moment, you're looking at even above 10%. But at the time, what was attractive for a lot of investors, mum and dad investors, and even pensioners, was the fact that they were offering 8.5% when term deposits were only offering about 4%.
And the MFS saga continues. You've got an update on that?
MFS, unfortunately, have gone into a voluntary administration. No huge surprise there. They were trying to avoid the unavoidable. They were involved in a lot of big projects, one being Mount Hotham in Victoria. That was a huge project. They were funding the Ray Group into that project, and that's just one of the assets that they've had to sell off due to the credit crunch and trying to tidy up their balance sheet. But now a Packer consortium has now taken them out. Now that project is still going to go ahead, but you know, it just shows that even the mighty can fall. Hastings Capital as well, another casualty of late. They were based in New South Wales, Northern Beaches of Sydney. Now it appears that they have 60% of their loan book in arrears. And this is all through development funding for developers. Now that's just another indication of how tight the markets are out there, because developers are finding it extremely difficult to refinance that debt. And this is what's putting these mortgage trusts under a lot of stress at the moment. Jim Raptis, the managing director of the Raptis Group, who's also in a bit of strife, came out this week and was quoted as saying it was a lot easier to get $100 million last year than it is to get $5 million this year.
We look forward to a little bit of good news from you from time to time on the show, and there hasn't been all that much good news lately, but wholesale funds are coming down.
Wholesale funds have come down. The banks are obviously a lot more confident out there in the marketplace. They're now passing on their rate cuts. They've already done that with the variables, and Westpac have come out and acknowledged a 0.3% cut in fixed rates as well. So the good news is that all the major banks will follow.
For all your commercial and development finance needs, call Iggy at Global.